We are alive, ladies and gentlemen. We are going to be doing a special little evening episode for you. We're going to be going over Ethereum, a little bit of our price prediction for the rest of 2021 as we start to explode past, pretty close to the all-time highs. Now, I'm a big fan of Ethereum. I really like the technology. I kind of like the underdog too. I like the fact that Ethereum offers a lot more capability to what Bitcoin is already capable of doing. And I think in general, when looking at technology and with like a venture capital mindset, you're looking for cutting edge type stuff. And I think a lot of people, like a lot of the big hedge funds, are starting to recognize that it's not just about Bitcoin. You know, Bitcoin obviously has made massive moves, extremely massive moves in the last little while, and because of that, Ethereum had been overlooked. Now, for us, we've been trading. Some of my first entries were back around 243, between 380 and 404, where I was taking some of my long positions. Again, we can go over what that looks like. I like to use a really specific style of trading range analysis. So what we're going to do is we're going to dive in and we're going to make a little bit of we're going to pontificate about Ethereum's price today. That's actually one of my kind of one of my favorite things to do here. So let's just go ahead and dive in. So we've got Ethereum open on the daily, currently sitting around $1,328.79 on the Binance platform, and around $1,332 on the perpetual futures. I kind of like perpetual futures a little bit more, but I have it here open on Tether because we've actually been following the same chart for quite some time. So one of my favorite things to do is go back to the daily chart so we can kind of recognize where we were. We hit our last SOS and LPS at around $609. And since then, you can see how powerful bull markets are. 137% for Ethereum since that last little bit of volume got in our way. Now we blew right past any of the resistance. Like once we got past the $600, $700 mark, it was nothing but up. And this is important to remember because we're also studying, not just making money. And that study is extremely important because these results are repeatable. Now, bull markets don't last forever, but these things repeat. And we've kind of gone over this mentality and strategy. So I'm going to make a little bit of some conjecture today. So we're now just getting to the all-time high with Ethereum. Now, we could make some kind of far-out idea where we go, oh, look, it's a cup and handle. Maybe we see something like this, but I don't think so. More importantly, what we want to do is zoom out and go with at least our first regression line. So for those of you that have been studying for quite some time, you will know that I'm a big fan of regression lines. And effectively what you're doing is just following parallel channels out of the breakout. So we've had our these regression lines drawn in, and as you can tell, they were kind of the last points of resistance before we saw these massive moves. We're going very easily to at least $3,000. At least $3,000. Now, markets get overhyped, and that's kind of where you start to see the blowout factors. So what I want to do today is go over a little bit some of the things that we haven't used for quite some time. One of the tools you don't really need to use for quite some time, and that's your Fibonacci extension and retracement tools. So I go over to the left-hand corner here of my trading view. Not that one. Here we go. And I go down to Fibonacci retracement. And what we're going to do right now is we're going to measure from the top of our trading range to the bottom of our TR. So as you can see, we've already broken out to pretty much the 0.4236 line. So we're kind of at some of the final areas of the extension of this trading range. Once we start to break out past this, we'll use a little bit more conjecture. So I'm going to delete that previous Fibonacci extension, and I'm going to use our previous LPS, which is our final takeoff point from around $600, and I'm going to drag it down to the spring. So now you can see the importance of these regression lines. Now, there's ways you can do this with the point and figure chart in the Wyckoff methodology as well, but it's not necessary. Point and figure was like for the old school charting in 1930s. It's very helpful for being able to tell how high you can go. But notice how from the previous breakout to the bottom of our spring, we hit the 4236 at exactly $2,600. Now, this is where the fun kind of pontification about highs and lows come in. Now, we haven't been able to do this since 2017. So first off, we're going to a bare minimum of around $2,600. Now, look, I stand by my sentiment that every day since March you can be accumulating, because this is the very beginning of a bull market. And not only that, we have some of the world's largest investors showing up to this sector on a very consistent basis. So it's important to remember that this is not made up of, we were still kind of the crazy people back in 2017 who had pipe dreams about crypto. It's not that way anymore. It's proven itself, and it's been able to keep a lot of value for a long time. So it's going to continue. Now we can see we'll probably get a little bit of our final resistance here around the $14 to $1,600 mark, kind of pretty much where we're at now. We might even see some type of trading range form in this area too, where you see another reaccumulation. Potentially, like right around this sector before the final move up. So again, these are still great positions to be buying spot. I had a friend call me this morning, as they all do. Oh, should I be buying or should I be selling? Look, if you're new to investing, you should just pretty much aim at accumulating for the next 10 to 20 years and not think about selling. Unless it's life-changing gains and you need to pay for hospital bills or family or debt or any of these things. Once you get to those life-changing gains, that's you go pay your family's bills, buy your parents a house, pay off all your debts, any medical or dental stuff that needs to get done. Those are ultimately more important than the money. So as you get into those higher forms of financial success, take care of yourself and enjoy the ride. But for now, let's focus on the study and the pontification. So this is going to be kind of a wild one, but what we're going to do is we're going to take one more Fibonacci extension and we're going to drag it from the top of the previous buying climax to the bottom of our spring. Now this is going to show us some really, really crazy far out lines. And this is kind of the one of the fun things about market cycle blow off tops. Is there's a very real reason to believe that once the FOMO kind of starts to really set in, you could see this final backup phases here. You could even imagine that this is another large trading range, something like this, right? Here's our phase C, here's our phase A, and this is kind of one of the fun things is trading ranges are fractal in nature. I suspect our blow off tops are going to be anywhere between $6,000 to maybe even $10,000 for Ethereum. Now, 6 is very similar to the point and figure chart that you would come to a conclusion of if you were doing standard Wyckoff or like older Wyckoff charting. But again, we can do the same thing by using these Fibonacci extensions. So I feel very confident that over the next, let's say 18 months further, Ethereum will probably find itself upwards of $6,000. Now, again, we could make conjecture that it goes higher because markets are overly ambitious and people get ridiculous. And once there's limited supply on the markets, these things start to really explode. So let's go with a common conservative breakout of the Fibonacci extensions all the way up of around $6,000. Now I'm going to do something I haven't done in a little while, which is I'm going to jump over here. I'm going to make sure everything's going smoothly. Yep, okay, and we're going to take a look at Glassnode. For those of you that have not signed up for Glassnode Studio, go ahead and sign up. This is a great resource for kind of checking some of the on-chain analytics. And instead of looking at Bitcoin today, we're going to take a look at Ethereum. Now, I should probably upgrade to Pro here, but as you can see, these are the number of active addresses. In January 2018, the number of active addresses for Ethereum was around 643. What's unique right now is that in this bull market, you can tell that there's less people here still. So we're basically hitting the same price point, but have a significantly less new addresses being opened up. And that's important because the average retail investor, that means they haven't opened a MetaMask yet. They haven't downloaded, shout out to DigiFox and Nicholas Merton from DataDash. They haven't downloaded a DigiFox wallet yet. So what we're seeing is basically a range of wallets that pretty much have already been here, right? I mean, you see a pretty obvious increase since January as the price has gone up, and it matched to some degree. We're currently sitting at around 530,000, so 100,000 wallets less than we were looking back at in 2017. For Ethereum 2.0, which is another really nice way to feature. Actually, do I have it here? New deposits, new value staked, addresses with oh, this is not the it's not the right category. Here we go. We'll go to exchanges. So here we can look at the exchange balance in general for Ethereum. So this is a kind of nice feature too, is looking at how much Ethereum is on exchanges. So all exchanges right now currently sitting at around 17 million Ethereum on exchanges. Wait, hold on. Is this back in January? Okay. Yeah. Okay. So we have okay. So wow, this is actually only back to January. Why is the data not showing up? Oh yeah, I have to upgrade. Guys, I'm sorry, I didn't upgrade this account in time. I'm gonna have to do this to go over this. We'll go over kind of some of the rest of this tomorrow. But what we start to see is basically a decrease in the amount of active wallets and how much each of those wallets hold, and you start to see a decrease of the supply on the active exchanges. Now, one of the reasons why that takes place is because once people get into a buy and hold pattern, they start to think on a much more long-term basis, and they're not interested in selling, so they take them off into one of their wonderful cold storage wallets. Now, if you guys don't have one of these and you're new to the ecosystem, go to trezor.io. I guess we should probably do a review of these. I forget that there's new people here, but I've got a bunch of these silly things. I love them. This is like the new school bling, right? No more need for gold necklaces, guys. It's all about the ledger. Funny story though. So this is a lot of the times they end up on hard or cold wallets. There are a bunch of different variations between that. You've got the old Trezors, and I don't know who's been around long enough to remember these ones. Where is this? Who's been around long enough to remember the original USB ledger? Anyways, fun story there. But the point of this is, because there's so much like active engagement in learning, when people start to go from exchanges to cold wallets, it means the volatility of the price, or like the liquidity on exchanges, starts to increase the volatility, right? So we see the same thing in Uniswap. Now, I've made a kind of a sentimental conjecture about this before, and maybe it's a good kind of topic of discussion to go over. Less liquidity means volatility in either direction, right? So if there's less liquidity on exchange, we were talking about Hex the other day. They're supposedly a multi-billion-dollar market cap, but only $1 million something on both sides of the trade. Now that's problematic. Richard Hart's idea is that, oh, well, the price goes up more quickly if there's less liquidity. Yes, this is true, but it also goes down faster. A big part of the problem is where's the other side of the trade? One of the interesting parts is that a lot of these trades are also still being based off the USDT. So one of the only black swans I can see in the potential future here is Tether. Tether is the only thing that could kind of rock the boat right now, because you've got like what's 20 to 60 billion dollars a day in volume from USDT, and if you kind of shake that too much, it could disrupt the ecosystem a little bit. Now, I do believe long term all the whales would just accumulate any of the lost Tether leverage trades effectively, because again, these are for the first time, I think, even in 2017, I don't think people really recognized the potential that financial technology had. For instance, the ability to buy Tesla isn't given to everyone, right? But why can't someone in rural Uganda buy Tesla? They would probably much rather sit on a Tesla stock than their degrading whatever Zimbabwe dollar. Same thing goes for Bitcoin. And these kind of global decentralized assets provide a whole new level of investment to people who would never be able to invest before. So even though USDT brings a little bit of risk into our sentiment, being able to get to our first target of $26,000, which would be our primary extension right here. And again, you can see when we use our Fibonacci chart how the basically top of the bar to the top of the primary SOS to where we are, you get a perfect lineup between the spring and the top of that regression line right here, the 4236. And since we've been in this ecosystem for long enough to know how volatile these things can be, this is not that far-fetched. This is actually in very close proximity to where we are today. Now, if you're new to trading, if you're new to investing, you have to recognize that these are volatile markets and that you should just be consistent thinking about the future. If you're getting into futures trading, if you're getting into leverage or options or call, do your homework and make sure you have a very clear strategy laid out before you ever enter a position, because it can cost you money if you make a mistake, and that can be no fun for you, especially if you're like everyone's making money. You're like, I want to get in the markets right now, like I just want to make a bunch of money. The investment thesis should take time, so be patient. Right now, what we're gonna do is we're gonna go in and we're gonna look at the 45 minute. And we're going to kind of take a look at peek see here. We're big fans, again, horizontal trading ranges, as we can see here. We just broke out of one, which means we're probably just getting started on this move. I think pretty easily $1,600 to $1,700 within the next week. Something like this before we see another horizontal trading range. And what's nice, guys, is we saw something very similar in Bitcoin, and we can kind of go back and look at this horizontal trading range here. I'm just going to brush draw it, so excuse me if it's a little messy. You want to measure the volatility of each trading range. So here the volatility of the previous trading range around $700 was only 10%. That's a fantastic position. Now here, there's a little bit more volatility in the ecosystem again, but you're still looking at only around 11% for the trading range. These are prime for making great plays, but you want to make sure you're very specific about how you play these trading ranges. I bought more Ethereum again today because, you know, that's what time of month it is. So I didn't realize how ridiculous that was going to sound until I said it. It's just that time of the month, ladies and gentlemen. You should be buying on whenever works for you. So again, I do suspect we're going to jump up to around $1,700 on this next move. We're going to probably form another trading range up near that $1,700 mark before we see some of the bigger extensions upwards of that $2,600 to $2,700 primary mark at our first regression line. That's my early stage predictions for the rest of the year, around $2,600. You might see more volatility in the ecosystem here where you start to see a bigger trading range, like a 30 to 40% dip. But right now, these are big institutions buying and selling. Now, one of the ways you can tell that it's big institutions is by looking at the volume signatures. So let's clean this chart up a little bit here. We'll get rid of the previous trading ranges and we'll look at the volume signatures. So down at the bottom, I should almost put the volume in a second bar so I can focus on just the volume and some of these other ones. But for now, we won't worry too much. Okay, we'll go like that. So here you can see, there are two important things we should go over. Number one, here, this was a very, very clear indication that we are going into a big bull market, is you had a rising price and a falling volume signature. I've said this many times and a lot of people get this wrong. Don't listen to them if they tell you otherwise because they're wrong. But notice falling volume signature, rising price. That is an extremely important indicator that the next move that is coming is like a monstrous play. When you start to be able to recognize the effort versus result in your trading ranges, that's like the final keystone to the rest of the trading range. So first and foremost, you want to know and recognize the horizontal trading ranges, which we've been studying in the Wyckoff method for quite some time now. And once you get that down pat, you want to start to lean into trying to understand these volume signatures. So look here. Now there's a lot of effort going into getting us up this high, but also this sell signature that came in did nothing to the price. It did not move it down at all. In fact, we have not seen a price degradation in Ethereum since we left the $700 mark. So even though we saw a nice trading range here that we were just looking at in the 45-minute that represented around a 10% move effectively here, it doesn't even show up on the daily chart. So you want to use a mixture of the daily time frame to have that long-term outlook of knowing, okay, we're going to 26, maybe even 6 to 9 grand on like some crazy extensions on this bull market. But you can use the smaller time frames to really, again, understand the volume signatures. So again, guys, look what we have here. We have falling volume, rising price. This is also what we would call a bullish divergence. You can look at this with other indicators. Commonly, people will use RSI, so I'll open those up here. Although they are a little different, I trust volume more than I trust the relative strength index. These momentum indicators are another great way to kind of measure the market sentiments. So here at the top, I'm going to open up, this is the Eagle's Nest. This is one of the free indicators we give away if you go to TradingView and type Arcane Bear and Eagle's Nest or Bear Claw. We give away a few indicators that you guys can all download for free. But as you can see, we've just turned up again and we've not hit like any type of sell at all. So each one of these represents a sell. Now, I don't sell when I see these. We are in a bull market, like there's no need to sell. There's no need to sell, but these can become a lot more important again when you're trying to understand these kind of minutia characteristics. When we're trying to measure, well, what is the volume signature doing versus the price? Again, very clearly, falling falling supply signature, rising price. That is a very, very bullish indicator. It's not, you don't want to see bigger supply signature comes in. That's the opposite. Anyone who tells you otherwise has not done their homework. So please ignore that. I can't know how many comments we've gotten in the YouTube comments about that. Just please do your homework. You'll figure it out. You can find out. It's very clear. And the reason that is brings us back to that conversation about liquidity in the markets. And that means the less Ethereum that there is on the open market, the easier it is to get the price to go higher and higher because more people are storing it in their hard wallets, which means there's less likely to sell. Now, again, we've got a price target of around 26 and then up to 6 to 9 on the blow off tops. For Bitcoin, we could go anywhere near like hundreds, $300,000 for Bitcoin. We really could. So where does that put us from where we are today? Now, again, entering the best positions you wanted to enter we're down here in June, September. But if you're new to the ecosystem, one of the reasons why the Wyckoff trading method is so important is because we want to stop the average retail investor from getting totally screwed over. Most retail investors aren't here yet, and we can clearly see that by the number of new wallets which are being created. They're not here yet. It's so easy to download MetaMask, right? It's so easy to just go add MetaMask to your Google Chrome, and before you know it, there's a new wallet. But that's not happening yet. The mainstream retail investor isn't here. And that decline of liquidity on the exchanges is one of the reasons why the price drives so high. It's because there's nobody selling. And I saw a fun question. Someone's like, "Oh, who's selling Bitcoin?" Institutions. Who's selling Ethereum? Institutions. And again, you can see that they're sell signatures. When you have big sell signatures here on the 1 hour, moves like this is not a person. Like, this is not Tiho selling, right? These are institutions. These are institutions testing supply and accumulating more. Retail investors leave smaller signatures like this down here. This is a retail signature. And see, they buy the peak and they don't do much to the price. They're like this little, this is like retail investment. This is like exchange investment down here. When people come in and make significant buys, this is retail. When they make this is institution when you see these big chunks. These are institutions selling. Same thing goes for Bitcoin. Okay, I hope that was helpful. I hope you guys liked my price predictions for Ethereum. Because this is a live stream, we're going to go over a few of our favorites. For those of you that asked in the private group, I am still in my band trade. And we've got a few more updates coming out. The private newsletter will come out in a few days. Our reaccumulation PDF is ready and will be out this weekend. Baloo and I were chatting about a few more tokens that are still in the early stages of reaccumulation, which means that they've got a lot of explosive potential upside just around the corner. So we will take a look at those as well. So I'm going to jump over, I'm going to open, I'm going to take a look at some of your guys' thoughts and questions and see how we are doing in the live stream effectively. Live chat. Okay, where's my live chat? Just give me a second, guys. For some reason, the YouTube pop-up live chat was not loading correctly. Let me see if I've refreshed it. Okay, great. So I'm going to snap this open. Thank you guys all for being patient for me with the second half of the episode. Because we are live and I'm fairly well slept after the ayahuasca ceremony the other evening. I've got a bit more energy to go over this stuff with you, and I even have myself a fresh kombucha that I haven't opened yet to take a look at. Okay. Hey, good to see you tonight. Thank you. Great to be here. I'm very happy. I love this stuff. Peace, love, all that fun stuff. Peace, love, and Ethereum rock on. Oh, the volume is a little low. Okay. I could turn it up. It's always a little bit difficult. I don't know how well. Sometimes it's too loud. Sometimes it's too quiet. And I never want to I'm still trying to figure this out. At least it looks good, right? At least we look super sexy right now. Tio is my favorite crypto guy. Thanks, Kush. Nice. Kush, I like your new I like your little logo icon. Calvin Smith says, when Tigo speaks, I go all in. Shh, don't. This is not financial advice. Please refrain from doing anything because I say something. Take responsibility for your own trades. But I appreciate the sentiment. I'm sure you're telling me that you trust the information that you're getting. Am I seeing a reverse head and shoulders on banned BTC? We already did banned inverse head and shoulders. That newsletter went out when band was back at $5. So band is already up 100% since we sent out that inverse head and shoulders newsletter. I'm trading band 13.5. Yeah, I've got a target of band for much higher. I entered that trade at 7.7, and I'm not gonna touch it until it's like, let's say $50 just for fun. We'll aim super high. Yes, Ledger Bling. Yeah, right. Blah, blah. This is the new gold chain. The reason why I have this gold chain, well, thank you to Leah, the person who made me this sweet necklace. But the reason why I have the Arcane Bear gold chain is as a world traveler, gold is accepted everywhere. Bitcoin's a little bit harder to spot sell if you're like in the middle of rural Guatemala or something. Gold is still pretty much accepted everywhere. As a matter of fact, just south of me, there's a town where there's so much gold where you can walk into bars and pay with little chunks of gold that you find in the river to buy beers and stuff. So gold still has a general recognizability that Bitcoin hasn't yet acquired. I can't go pay for that. Not that you'd want to pay for a beer with Bitcoin. That would just be silly, but I think you get the sentiment. Gold is recognizable at a pretty easy degree. Bitcoin is earning that recognition as we speak. What would be the best time to buy Ethereum? We'll do a video on that tomorrow, but my sentiment for the new investor, which it sounds like you are because you don't own any Ethereum yet, is to just buy small amounts that you can afford to walk away from and not think too much, and do that on a monthly basis for the next 10 or 20 years, because that's how you win the game. If you're concerned about like trying to make a bunch of money right now, you're probably going to lose because you're too emotional. So if you haven't bought any Ethereum yet, buy some right now, not financial advice, but just be focused on buying what you can afford and what you can afford over a decade. And that's how you really win these games. 10,000 by year end is very realistic. Yeah, I think we're getting a blow off top, probably like 9 or 10 grand, but 6,000 is like a nice reevaluation, and then we'll probably reaccumulate around 2,600 where that final regression line is. Maybe we'll even go over a little bit more regression lines in some of our other videos. I think it's a very helpful way to kind of judge sentiments in the markets is to look at these regression lines. It's such a powerful tool. Like I guess in general, technical analysis can be very powerful, but you have to be patient. And that's the reason why so many people get it wrong, is because they're like, oh my God, it's a cup and handle on the 4 hour. It's like, no, there's no cup and handles on the 4 hour. You want to make sure you're studying people that know what they're talking about. And you want to, I really highly suggest, if you don't know what the Wyckoff trading, there's an innumerable amount of resources you can find on the internet where you can get stuff for free. Or again, this is exactly what we study in the Arcane Bear group. We've got we try to produce as much educational content around that specific thing as possible. And for you guys, we try to do these consistent video updates. So in the middle of kind of the market hype and sentiment, you get a first-hand view of what it looks like while we're going through the market. Because it can be daunting and very emotionally distracting when what you see is pretty much up only every day, when we've been watching these trading ranges since March. So if you're new here, the study is extremely important, because it can end up paying off multiple fold higher than your initial time on deck. So I definitely suggest studying the Wyckoff trading ranges, and you can do that innumerable places for free. Wyckoff has tons of books he's written, or you can join our private group, links below. Anyways, won't shill our product, but if you want to join, go ahead and join. Okay, we'll take a look at a few more of your questions. When Ethereum 2K, like next week, we're going to $1,600 after we just broke out of this range. I feel very confident about that. And then probably closer to 2,600. So 2,000 is like a very brief blip on the way between each of those trading ranges. People will FOMO into Bitcoin, Ethereum, or when they reach all-time highs. Yeah, exchanges, Cash App, PayPal, just a lot of retail just be staying there. I think PayPal holding for people and their ability to buy and sell, even though they can't hold their own Ethereum, is still kind of a good thing. It's a little bit of an easier entry for a lot of people. A lot of people already have PayPal too. So we would that would take away some of the active addresses that we might see on Ethereum. So we could make a little bit of conjecture around the idea that because PayPal is offering these Ethereum custodial relations for a lot of the people that might be buying through PayPal, we don't see them on the active Ethereum or Bitcoin addresses, which may be a little skew the data a little bit, but probably not much. Not enough that I think it would make a huge difference, especially because we see total vertical rises for Ethereum right now. That to me is, I think, is a clear indicator that even though the market is extremely bullish and the amount of each of these assets on exchanges is decreasing and increasing the volatility to the upside, those general retail investors in PayPal probably aren't making that big of a difference. They're not institutional buyers and sellers. Their ability to drive the price up is really kind of diminished in comparison with the other big players who are out in this ecosystem right now. So I wouldn't necessarily factor it into my thesis at this moment. Let's take a look at a few more of your guys' thoughts and questions here. Cryptocurrencies are volatile. The value of cryptocurrencies through extremes, ups and downs. Yes, very, very volatile. But that's what we like. We like volatility. You just need to be able to know how to position yourself in it. You can't tell institutional trading with just volume. Abso-freaking-lutely you can. The Beav, you need to do more homework. You have no idea what you're talking about. Yes, you can. That's like the whole point of understanding the volume relationship in a market. I highly suggest you do more study because you definitely got that wrong. But thank you for joining us anyways. It's good to see all the new people. Give us a thumbs up if you like this content. Yeah, volume is an extremely important way to tell who the buyers and sellers are. And again, look, you're correct in assuming that institutional buyers are buying OTC, but not just OTC. If you listen to Michael Saylor, he's like, yeah, we've got bots running, accumulating Bitcoin off of the exchanges. Yeah, I promise you, you can see institutional buying. It's very, very clear. Let's see, here we go. More questions. One to BTC. Okay, Cali Cass has no idea what he's talking about. Well, unless you're joking, I can never tell. Sometimes it's so impossible to tell if you guys are being facetious. Awesome. Okay. Cool. We'll dive in and we'll take a look at a few more of our. We'll take a look at a few of your guys's. The token interests. I know a lot of you guys like when we go over and we look at just general markets. I know you like when we look at a lot of the altcoins and the other options that are out there for trading potential. There is a lot of the altcoin sector, or the alternative digital asset sector, the up and comers. I really feel that those are akin to venture capital. And with venture capital, one of the best ways to win that game is to understand that they're extremely volatile, both up and down, and that even a small position in them can be massively rewarding. So let's take Band for instance, and maybe go take let's chart Band for a minute, because it's one of the ones we've been trading in the private group, and it tells that story of venture capital volatility that I think is a lot of fun to kind of look out for. Okay, so Band perpetual futures. We want to go Band regular. Let's see, by US dollar calculated. Okay, yeah, here we go. This should give us enough data. Yes, okay. So I'm going to switch the screen over here for just a minute and we'll go over Band. Boom, like this. Okay, so here's the idea about venture capital. Very volatile. Now we'll go over our trade here because it's doing really well. But look, if you had entered Band in March and you sold at the high, that was approximately 8,000% gain. So if you had put, let's see here, $1,000 in there, you would be walking around with around 80 grand from that trade. And that's kind of the point of venture capital, is that you put a small amount of money in and you get a huge return, or you lose that small amount of money. And that's like it. This is it's almost like a binary trade, because generally venture capital, you couldn't really move in and out of the market before. Now you can, but that wasn't always the case. For a long time, it was very difficult to get out of a position because it was venture capital. Like, who would you sell early seed stage capital of Twitter to unless it was like, hey, Naval, like, how you doing? You wanna buy some more Twitter? I need to, or like, you know what I mean? Or David Cho is a great example. The guy who got paid in Facebook stock for the art that he did. He made like $500 million from drawing a painting in the Facebook offices in the very early days. But in the very early days, he couldn't sell it. It wasn't until way later that he's like, oh, okay, well, like, this is how I survive now. Just like shave little bits of, I'm sure he just get paid in dividends but that's how venture capital works. It's almost like a binary trade. It's either I'm going to lose that $1,000 or it's going to turn into like 80 grand. So when you're playing with venture capital, Band is a great example of this because it's very clear and easy to see the upside potential versus the limited entry. So for anything, almost anything outside of Bitcoin and Ethereum, I would look at it as venture capital. And that's what I think about Avalanche, which is another one of our favorites. Band, which is another one. So Band, we sent out a newsletter. Now I apologize that some of the guys in the private group didn't get this newsletter. I found out. I fixed that now. Thank you for pointing it out. There wasn't too many of you. It's because it doesn't matter what I got wrong, but I made a mistake. We've been going over it almost every day in the private group, but I did get the message that like maybe 5 or 10 of you didn't get that. That was my fault. I apologize for that. And I've already fixed it too, so it won't happen again. But here we saw what I consider to be a really nice, beautiful inverse head and shoulders in an accumulation range. And these are powerful. Now, we could actually even go so far as to say that it's a tertiary style of one of our accumulation ranges. So here, if we go, I have to remember to pass those over. So I'm gonna, this is the Wyckoff reaccumulation schematics. This is, again, there's countless free stuff you can find. We have our own ones that we have drawn up in our private group. And again, that we'll start using those. I always forget to put them on the laptop for some reason. I have no idea why this is going so slow considering. It won't even load a picture. Okay. Yeah. So this is another way to look at that potential reaccumulation schematic for Band. Would be something like this, where you see very similarly, although the backup phase out here did not last very long. So we could make, again, conjecture that it's more of a primary trading range down in this area effectively. So that's Band, and that's the kind of the venture capital idea. That's generally how I try to think about this market in general, is looking at it like venture capital, because it's very easy to get caught up in the hype of something and want to, like, oh, I'm going to put all my money in Theta, and that's it. If you're interested in investing in Theta, I say look at it like venture capital, and really try to give yourself the understanding that it could be worth nothing, right? Or you could make, let's say, 1,000% gains off of it, or 10,000% gains off of it. It's a very real possibility. Who knows? Like I said, it's very likely I could be wrong about understanding what Band is, or what it could, or what Theta is, or what it could do in the markets. Now, I don't think I am, but could be. And it's important to remember that I don't know, and that's why venture capital needs to be more of a binary trade. Now, in terms of using leverage, you want to be very specific with your trades. You want to be able to execute a very specific type of strategy. And because of that, I don't look at futures or options anywhere near the same as I do venture capital. Avalanche is another great example of a venture capital type sentiment where I'm just accumulating small amounts of it and thinking about the 10-year process and the 10-year game plan that's at play right now, because that's really the only way I can manage the mentality around understanding what's going through these types of trades. Whereas like going leverage long on Avalanche, you got to be so specific. Like, you have to be crystal clear and make trades like a gangster. Or otherwise it's so easy to lose money. So for most people, I would definitely suggest thinking about it more as venture capital than I would looking at it as like, oh, here's a great place to go leverage, right? Even Band, the only reason I jumped in there with leverage the other day at 7.7 is because I've been practicing playing these types of trades and aiming at some, like, getting those, I want those home run plays, right? I want knock out of the park plays. So because of that, patience and execution and study are like at the top of the list of things to do. Okay, let's take a look at a few more of your guys' questions. Hopefully that helped answer your thoughts on that. I know that I see a lot of questions here. VeChain. Okay, I will look at VeChain because a bunch of you guys had asked on the last episode. Ethereum's going for it. Nice. I'm glad we're getting this live stream just as Ethereum is starting to explode. We're at 1326 still hovering around that final kind of breakout and backup phase. Again, for these live stream guys, one of my favorite parts is that we get to go over and answer all of your guys' kind of thoughts and questions and pontificate about what's happening in the markets together. It's a lot of fun for me, so I'm grateful for that. Wow, 460 people online right now. Guys, if you like this content, give us a thumbs up. I would really appreciate that. Helps other people later on down the stream find this content that they might be looking for. So be sure to give us the like button and share this video with your family and friends if you think it has been helpful. Okay, let's go back and answer a few more questions, and then we'll take a look at Bitcoin finally. Big drop won't happen until we're over 100K. Yeah, for the average investor, just keep accumulating is pretty easy sentiment. Link got rejected at $18. It's done. Nobody wants it. Yeah, that's not true. It's still in a lot of retail hands, and bigger players are trying to shake them out. It has very little to do with the price rejection. Having it failing. Link is a huge player in this ecosystem. The reason we have somewhat of a stable place where we are is because Link is such a powerful player in this ecosystem. So I wouldn't downplay it. I keep it as part of my venture capital play now too, although it is much closer to an Ethereum and a Bitcoin than a venture capital play at this point. With all the deplatforming, Theta TV may be huge. I disagree with this sentiment, although I just don't see how they would get the people. Like, I don't see how you convince Mr. Beast, right? Mr. Beast isn't getting deplatformed. You know what I mean? PewDiePie is not getting deplatformed. And those people have what? I think PewDiePie's at 150 million followers now. He gets like 16 to 20 million views a video. Same with Mr. Beast. Those guys aren't getting deplatformed. And look, Mr. PewDiePie is more popular than Donald Trump. You should remember that. And he's not inciting violence either. So I don't really think that Theta has I don't think that their game plan is as strong as people think. And again, that's just my personal thought. I don't know. But as a venture capital play, heck yeah. And not only that, the other thing that we saw is there was a very beautiful trading range there for quite some time that was like a perfect trade. And if you see perfect trading ranges, I suggest that you play with them. They can be very powerful. And that's why we study this Wyckoff stuff so frequently. That's why we constantly keep going over these trading ranges, because a lot of you guys have sent me messages of how great the success has been for you because of the confidence you have to be in the market, because you know where you are in the market. And that's one of the most important parts, I think, as well. I just bought $5 in Maker and it went up 60%. Nice, good job. Subscribed, thank you, I appreciate that. Yeah, we will go over VeChain. Okay, that's a few of you guys. Okay, let's go over VeChain right now. Let's see here. One sec, I'm just gonna load VeChain up on my charts. Okay, I've got it here now. Wait, what is it? Wait, maybe I don't actually. Is this the right vet? Is it vet? Did I get that right? Yeah, okay. Cool. I'm just loading VeChain up in the background for you guys. Just give me 1 second here. This is the joy of the fun of the live stream, trying to go over everyone's personal interests. Okay, yeah, I believe it is vet. Okay. Got it open on the daily. Okay, this is why everyone's talking about VeChain, is because it's kind of in it's already in a breakout moment. Like, I wouldn't be entering trades here necessarily, and it doesn't look that powerful either. The accumulation pattern doesn't show me like the sweet sexiness that we've seen from some of the other ones. Like even Theta's chart looked much better than this. But anyways, we'll go over it because community has asked for it a few times. Okay, so here we go. We can see, well, between June and July, see the ample time was back here, was back in May, April, June. This is like, again, this is when the bull market started in March. So again, bull market started in March because of the pandemic. And you can see if you bought VeChain every day since March, you would be up 1,500%. It's pretty damn good. Better than Bitcoin, right? At least from March to like from day to day. So this is a little bit, even today, like here's today's trading range. This looks like a pretty common one that we've looked at, which is a horizontal trading range with a spring at the bottom. You can see the spring in the volume, significant supply coming in to get this price, and the negative sell pressure isn't too high. On the 45-minute, you can see a new potential reaccumulation range taking place. So I'm not in this trade, but if I were interested in entering, I would be watching this horizontal trading range. I would probably look for another test, a spring, maybe even like a dip like this before another breakout. I don't want to speculate on how high it can go because we're in a bull market. You know, everything's kind of exploding. And that's a really unique aspect of a bull market as well. Kind of everything's exploding, right? So don't get too carried away with things like VeChain. That's definitely a venture capital type play. Again, I think that when you're looking at venture capital, 1,500%, what you want is just small amounts of allocated dinero for each of these plays. Again, if you're starting to get really good at using the Wyckoff trading ranges, you can use leverage and you can execute significantly more powerful trades at that point as well. And that's an important part to remember, is that this type of study can yield great gains, but you have to know how to execute, when to execute, and how do you stop losses are so important. Knowing how to take a loss is hugely important before it starts to hurt effectively. It's just one of those crazy moments where one sec here, guys. Sorry, something just happened on the background here. Let's take a look. Oh, I apologize. I'm not always great at this streaming stuff. And because I have to jump around between screens here, I'm gonna try to order one of those Elgato stream decks so that I can switch between stuff a little more effectively. Yeah. Okay. Okay, there we go. I think I got it figured out now. Okay. Well, I'm going to leave it at that because I think everything's going smoothly. I'm going to leave it at that. It was kind of a long episode as it was anyways. Thank you guys all for joining us this evening. We will be back tomorrow with another episode. If you are interested in our Ethereum price predictions, go back to the beginning of this. If you're new to the channel, please like, subscribe, and share. Leave your comments, your thoughts down below. Yeah, thank you guys all. I really appreciate all the support. This is Tio with the Arcane Bear. We're rolling on almost an hour of time this evening. So it's been tons of fun, and we will see you guys again on the next episode. I'm going to leave you off with our intro, outro logo, and